In Chapter 4, we look at both a classified balance sheet and the statement of cash flows. So I'm going to walk you through one of each of those. If you want to follow along, I'm looking at exercise 4-11 for the balance sheet. So we're going to start there. They give you the adjusted trial balance, and what you need to do is separate this into the classified balance sheet, which means we have to put everything in the right category. So we're going to start with our assets. But within those assets, we need to separate that out into current assets first. So for the current assets, we'll come back up here and find what those current assets are. Cash, but they don't tell us what that is just yet. We're going to have to back our way into that. Supplies is a current asset, as well as prepaid insurance. Typically, your assets are going to be listed in liquidity order. So if all else fails, start at the bottom or start at the top and move down until you see something that doesn't belong. That's just kind of a tip, not a definitely go-to, but typically that's how it's listed. So we'll list out our current assets. First we have cash. Again, we still don't know quite what that is. We have supplies. Those were $1,200. And we had prepaid insurance. Remember, those current assets are anything within a year or the operating cycle, and that was 1,000. Again, I like to come up here, cross out what I used so that I know I gotten everything at the end that I needed to. So here we're going to list out our total current assets. And if I add those up, I don't quite know what that is yet, so I'm going to leave that blank. The next section we're going to look at is property, plant, and equipment. Here, I'm going to come back up here and list out, find everything that goes into that property, plant, and equipment. I have my equipment, and remember this contra account of accumulated depreciation. It goes wherever that equipment goes, so that will also be listed there. So I'm going to put those together. I have my equipment, and that was 4,800 or 48,000, but then I have that less accumulated depreciation, which was 4,000. That gives me a total of 44,000 in that category. Next, I'm going to list out my intangible assets. Here, again, going in order, are those trademarks. List that out. And those are 950. And then add it all up to give me my total assets. Again, we don't quite know what that is yet because we can't fill in our cash just yet. So we'll wait for that number. Right. Now we're going to start and list out our liabilities. In our liabilities, because that's a classified balance sheet, again, we're going to separate out those current liabilities and the long-term liabilities. Our current liabilities, if I look through that list, Again, typically they go in order. I have my accounts payable, salaries and wage payable, and my unearned service revenue. So I'll go ahead and list those out. I have accounts payable, and that was 10,000. I had my salaries, and that was 500, and my unearned, which was 2,000. And then that will give me my total current liabilities. If I add all those up, it comes to 12,500. Next, I'm going to list out my stockholder or long-term. First, we gotta hit the long-term liabilities. Here we had listed out that bonds payable. I remember these, it's important to note the due dates because this might fall under current, but since this due date is far in the future, we're going to list that out as a long-term liability. And that was 9,000. So my total liabilities together are 21,500. And the next section is your stockholders' equity. Here, we know we need to list out our common stock. I know trying not to scroll as much because I think that would make me sick as well. But that was at 10,000, and then we have some retained earnings for 25,000 that will also fall into our stockholders' equity, but that's where this net loss is going to come into play because this is before we do those closing entries. So we're going to list out that common stock. That was 10,000. And then we had our retained earnings. And that was the 25,000 minus the 2,500. So that should be 22,500. That would give me my total stockholders' equity. Add those two together, which is 32,500, to finally give me that ending balance of total liability and stockholders' equity. If I add those together, which is 54,000. So now that I know that number, that's going to help me in the end because we know that my assets have to equal my liabilities and stockholders' equity. So therefore my total assets must be 54,000. Right? And I know that these numbers go into that, correct? So if I can back in and take that 54,000, subtract out those two numbers, I know my current assets must equal 9,050, and that's just taking the 54,000, subtracting that 950, subtracting the 44,000. So now I'm at 9,050. And therefore, I can go ahead and subtract those two numbers. Oops. Not that two. That doesn't change. But I take that 9,050. I can subtract that 1,200. and the 1,000, which would give me a total cash balance of 6,850. Not necessarily what I wanted you to get out of it, how to back into the cash, but I wanted to show you all of the components of the classified balance sheet. So one thing to remember is the key things that we want to separate out: current assets, property, plant, and equipment, intangible assets. Then we also want to make sure we distinguish between current and long-term liabilities, and then get that stockholders' equity section in there. So that should give you that whole classified balance sheet that you need to complete, just making sure you get all of those aspects into it. All right. So now let's go through and try the cash flow statement. So to start with the cash flow statement, they give you the comparative balance sheets, because you're going to need to look at the difference in the years to find out, especially for this operating section, the net cash. So we're going to start there, and we're going to label out everything that needs to go. So we're going to start in the operating activities. So we list out cash flow from operating activities. And always here we start with our net income. They tell that to us right here. So that's $160,000. And then we're going to start making some adjustments. Here I like to pull in the non-obvious things first that I know I always need to look for. So I'm going to start with depreciation expense. I'm just going to abbreviate here so I have enough room and so you can actually read it. So my depreciation expense, I can always look to that accumulated depreciation account and take the difference there. So if I subtract these two numbers, the difference is going to be $17,000, which will tell me how much that depreciation expense was during the year. Remember, depreciation expense is a non-cash expense. It lowers our net income and therefore, but doesn't impact cash. So we need to add that back in. Same thing with these loss on investments. Always look for those. They tell us what that is there. We took a loss. We decreased our net income, but that's not really a cash impact. Then we're going to go through and look at the differences in our balance sheet accounts. For example, the difference here, now remember you're going 2024 to 2025. So I have a $5,000 decrease. Then I'm going to look, well, let's write that down first. So I have a decrease in accounts receivable, and that's $5,000. Remember, from your reading, you should know that if we have a decrease in accounts receivable, we're going to add that back in. So one thing you want to remember, if it's an asset, you do the opposite. If it's a liability, you do the same. So whether it's a decrease or increase, kind of something easy to remember that by. All right, then we're going to look at the liabilities, the current liabilities here. We're looking at the difference in that, and the difference is a $17,000 decrease. So again, we'll list out that decrease in current liabilities. But because it's a decrease and it's a liability, we're going to subtract that amount. I'm going to add up all these adjustments I'm making. And if you add all that through, it's an easy $15,000 increase. I subtract that from my net income, or add it because it's an increase, so it's 175. And this is my cash, net cash provided by operating activities. You notice it says provided by because it's a positive number. The next section we're going to look at is the financing activities. So I list out cash flow from financing activities. And I'm going to pull in anything from that list that it's a financing activity. Let me delete that. We don't start with financing. We start with investing. I was getting ahead of myself. So let's start with investing first. Investing activities. So part of the investing activities is when we sell an asset. So that sale of machinery here, I can tell that that happened right here in my investments because that number decreased. It decreased by $22,000. But remember, we took that loss on that sale. So really, the cash flow from the operating activities, we only got $12,000 from that. So we'll say sale of investment, and that was $12,000. And then if we come up here, find some more investing activities, we can look at our equipment, see that that increased by $58,000. So we must have purchased some equipment. We'll list that out here. And that's going to be a decrease in our cash since we purchased that equipment. We'll sum those up for a negative $46,000. I will then say net cash used. So notice the difference. Because it's negative, I say used by investing activities. All right, one last section, and that's the financing section. So we're going to list out cash flow from financing activities. And then we're going to go through and find anything that related to the financing. There's only one thing in here, and then it told us we paid some cash dividends. Those were $30,000. So I'll list that here. It's really important to know what section everything goes into. So that was $30,000. There's only one thing in there, so. Now we can list out by looking at every section, each 3 sections, we have an increase in cash. I get this by looking at my net cash. I should probably scooch this over. My net cash provided by operating activities. I'll subtract out my investing activities. Subtract out my financing activities, and that's going to give me my net increase in cash. if I do that math, it should come to 99,000. I'll add the cash at the beginning of the year, which should be listed here, 78,000. And hopefully that will equal my cash at the end of the year. Let's see if we did it right. It should equal, it does, yay. So that should equal your cash at the end of year. One last thing I want to go through with you before we hit a couple of multiple choice questions is that free cash flow. This is that quick equation. You're starting with your operating activities, that cash flow from your operating activities, which here was 175, I think. Yep, 175. We purchased some equipment, so we're going to take that out. So any of those investment opportunities that we spent money on, as well as the dividends, which would give me my free cash flow of 87,000. All right, that was a lot to go through. I think it's easiest to take each section one at a time and remember the easiest way to remember how to do that operating activities is remember if it's an asset, you do the opposite, meaning that I had a $5,000 decrease, which means I'm going to add it. Whereas a liability, you do the same. I had a decrease in liability here, so I'm going to subtract it there. That's like the biggest hint from that whole thing. And most people get this wrong just because they forget the provided versus used. So make sure you're grabbing the right one in the drop downs in the homework. All right, let's look at two different types of multiple choice questions. You do these long homework problems and it's all condensed into 4 lines for a multiple choice question. So let's look at what that looks like. Again, for the statement of cash flows, it's really important to know what goes into each section, and that's what this first question is asking you. They want to know which is considered an investing activity. So we're going to go through these because I know the answer and start at the bottom. The issuance of bonds, remember that's a financing activity. When it says here declaration, this creates a liability. It is not a cash activity. So that is non-cash. It's not going to show up in our investing section. This one here, when we look at the $2 million in merchandise, that key term there is telling me it's an operating activity. So we must know that the answer is going to be the first one, that equipment. And we know anything in the investing section, we can really rely on property, plant, and equipment activity to be in that section. And one looking at just what the balance sheet might look like or what we need to do here. They want to know what total amount should this company report in stockholders' equity. So we're just looking at a piece of that whole balance sheet, which is typically what a multiple choice question would do, is just give you information, and let's look at just one piece of that to make it a little bit easier. So we know that the common stock's going to be in there. We know treasury stock is going to decrease my equity. Again, they're going to give you more information than you need to know because they want to know if you understand not to include it. income taxes is not going to go into my stockholders' equity, but retained earnings would. So if I add that all together, it should come to 2170. And that should be your answer. So give this all a try. I know as these chapters keep going on, the content gets a little bit harder and harder. So don't forget to email me with questions.